What's going on, guys? Welcome back to the channel. So this is a SUI update, one of the most popular layer ones from the last bull cycle, going all the way from kind of like 15, 20 cents, 30 cents, all the way up to $5.30. A lot of people call this a $20, $30, $40 project. Will SUI go there over time? What are the latest developments in a bear market? Of course, and this was one of my best buys in the last cycle. I caught this at 72 cents finally when I pulled in the trigger. I still have a massive SUI bag because I think this is a multi-coin, multi-cycle opportunity. But from a pricing perspective, fundamentals, and of course, the big money, SUI has seen all of this before. It is part of the top 15 chains in cryptocurrency. So all-time high was January 2025, where it peaked at $5.30. The development growth, or the dev growth right now in terms of monthly active user, all time, it is around 219% year on year. So it's safe to say that SUI solutions over the next couple of years, from institutional markets to DeFi capital to AI, which is an interesting one because SUI runs on the Move programming language. And we are yet to see, of course, being an incredibly fast layer one blockchain, I think SUI has a massive growth for AI. Now, recently, of course, they've announced that a project called Walrus, one of the top projects on the SUI blockchain, it is also part of their tech stack. So privacy first AI, they're looking at the opportunity to scale, modular by design, no governance. So there are many reasons as to why SUI should actually build fast gaming and fast AI. Blockchain gaming is not a thing right now, of course, but so far what you have is the coordination layer, which is the SUI blockchain delivering parallel execution and low latency settlement, which is a key development. Walrus storing training data, modules and inference logs. And now Walrus has moved to their kind of what we call the SUI AI roadmap, which is quite important to actually consider. And then you have Seal, so keeps all AI models and data private and gated, of course. And then Nautilus enables confidential but verifiable training models. I think this is where big layer ones are heading. But with the speed and with the kind of technology, the ease of use in this particular blockchain should actually give it an advantage of AI. Are we there right now? Not at the moment. But what we have is a bunch of massive VCs involved in the SUI blockchain. So we have the Google's launch partner for Google's agentic payment protocol, which is called AP2. And then we have Talos, we have Flock, we have various other different things going on. But if you bought SUI somewhere or anywhere near all-time highs in January, or even previously, if your average is quite high, then this is the video for you. Because right now we're sitting at a 80 cents to a 91 cents range. And if we look at the price action, if you look at the weekly, SUI has a macro support going all the way back to October 2023, and it has respected that every time the price has come there. So we have a major support going at two different levels, but we have not broken this yellow line yet. You can see we've hit this again. We're likely to test the lower 80 cents again. Where should you buy SUI is probably what people are asking. And it all depends on how you DCA. And again, it depends on whether you believe in a multi-cycle layer one that can attract institutional money for tokenization, for AI, for fast applications that SUI is known to execute very, very well. SUI has got its also detractors. I mean, we've had key protocols within the SUI blockchain that were hacked, but we have fallen out of this new range that we've traded since 6th of February. So we had that major crash. We went all the way as low as 79, 76 cents. And then we've been trading this sideways range for a while. So you are not alone in terms of thinking, okay, when is the right time to strike? Now, ultimately, we wanted to see this range continue for a small growth, but right now we are literally closing multiple candles below this range. You can see the price has come and tested this level several times. So if we come here, from here, you could see we've tried to do kind of like a test rejection here, test, rejected, another candle came, got rejected, of course, and we're starting to see these closes below this key line. What does that mean? Well, I've got levels for you to plan some good DCA levels. So the first level here is this 80 cents range. It is absolutely key to see from 86, of course, it is now facing resistance in the short term, but this will be a major level of interest. I think this level has to be watched. Anybody who wants to accumulate a good bag of SUI, we're not out of the macro, but this is range number one to see what happens right here. Break below that, I can see the door opening massively all the way to 60 cents. So from where we are, 86, you are going to come back to this green channel. From there, you are definitely heading to the major support level if you break the current structure. Now, bearing in mind, of course, you've got 82 to 83 cents here, 80 cents ultimately. So first you have to decimate this level, this yellow line here. And I think we are going there to at least do one last retest. Ultimately, where would you buy? I mean, 40 cents, 50 cents, 60 cents. These are all good levels to accumulate SUI. But I do expect perhaps 60 cents to form a natural floor for the bear market. Massive life-changing opportunity, because next time round, chances are maybe this goes to $10 with better tokenomics and better utility in terms of the ecosystem. Okay, so this is what's happening from a price perspective side. In terms of the TVL, it's crashed, of course. 24 hours, it's lost another 7% of its total value. Now, this number is quite key because this was over $5 billion at one stage. So all-time high here, the stablecoin market cap is going to be incredibly key. And right now, its stablecoin market cap has been totally decimated as low as $500 million. Chain fees, next to nothing, $7,000, $8,000. I'm not surprised. There's no money in crypto right now, right? It's incredibly risky, but these are the times where we pay attention. DEX volumes, 62 million. Of course, a lot of that is wash trading, bots to keep the volume going. Bridge TVL, that's about $1 billion. That's quite healthy. Now, these are Solana, Ethereum, and other bridges on the blockchain. Market cap here, 3.4 billion. And when we look at the market cap chart, because that is different to the price chart, we have to pay attention to the market cap chart here. What we had is October's liquidation candle, which came all the way back down to 3.3 billion, which is this circle here. But if you look again, over 800 days, nearly 900 days of continuous market cap support. And this continues to be quite interesting because I know everyone is going to be ultimately looking at lower prices, but this is a multi-year trend going all the way back to 2023. We had multiple, more than 3 touches there, or actually 3 solid touches. And every time we came near this yellow line, the market cap has always held. But I do see another attempt to come here and test this level. Now, if it breaks down, the ultimate market cap bear market buy levels will be towards $2.68 billion. That time, the price will be below, 80 cents, even 70 cents. Price could be around that 60, 65 cents level. Still an incredible bargain for the bear market. Now, technologically, we talked about the AI stack and why, for example, Walrus is going to be a good solution for them in the end. Of course, we've got capital markets. This is becoming, this next cycle is all about institutional adoption. But there's one question we ask ourselves all the time as investors. How much of that utility is actually coming on to the particular layer one? I'll give you an example. So Ondo is doing massive tokenizations, but how much of the Ondo token is going into the tokenized bonds? And of course, is it just a stablecoin? So layer ones are actually slightly better in absorbing all of these fees. So institutional blockchain stack, I can see why institutions are incredibly bullish on SUI, Whales as well, because of the scalability and the speed. Of course, vulnerability in terms of security, that's something that SUI or every other layer one is prone to. But capital markets here and programmable finance is going to be quite key. Interestingly, DBook, which is the liquidity pool for the SUI blockchain, has been struggling. You know, all of the dexes, all of the Cetus has actually been the one that's been doing very, very well. But we're talking about stable coins and institutional finance on this side. So this is going to be quite key. If anyone's able to get in front, again, project that's made in USA, listen, you know, these are the times where research is done into these things. So I hope you are aware of the potential in terms of both risk and opportunity. But we need to see what they come up with here. Because again, tokenization on Solana, institutional adoption on Ethereum and Solana right now is way out there, is way ahead of any other kind of blockchains. For example, Solana processed more stablecoin transactions than any other blockchain recently. And of course, Ethereum is the backbone of this entire institutional adoption cycle. So that's something to look forward to. Now, completely in terms of price versus fundamentals, yes, they are disconnected, but because we're in a bear market. So what is SUI? SUI is a layer one built by Miston Labs, of course, and this is all about the ex-team of Meta engineers previously who worked on DM's, Facebook's DM's projects. You know the history, but if you're coming into crypto, the launch date for the mainnet was back in May 2023. Now, this is one of the few altcoins that did really well off the back of late 23, so October 23, and had a decent move up, but it hasn't been incredible. Like, you know, that was, you know, compared to other layer ones like Solana and what we saw in 2021, we never had a bull market of such. So the key difference with SUI is that it uses an objective-centric data model, okay, the Move programming language, instead of the traditional account-based structure used by most blockchains. So that is a key differentiation. And it does have, you know, it does have bells and whistles, such as, you know, you've got the ability to passkey, you've got ZK login. Of course, you've got this entire SUI stack that I was talking about. And that is a very good thing to pay attention to in terms of how they actually build this entire digital economy when it comes to, in particularly, I think they are massively lacking on their capability for AI, because I think with the speeds and the technology that they have, they should be doing more in terms of AI. But they do have this tech stack, which I believe is quite interesting and worthwhile looking through in terms of the blockchain or the SUI, you know, system going mainstream. And that's quite important. In my opinion, when I'm assessing a long-term Solana competitor, of course, the money that's in Solana always will rotate into these other smaller layer ones, and it happens every cycle. So that is quite key. Now, in terms of, for me, that's what makes SUI quite special. Theoretically, it could actually pull around 297,000 you know, transactions per second, or TPS. Whether that's obviously proven or not is a different case. But DBook, Walrus, these are, you know, these are protocols that you need to watch, because again, very, very, in terms of the value versus the market cap of the layer one, these will be beaten down horrifically over time. Again, the backbone liquidity for DeFi on the SUI blockchain. This is DBook, of course, all-time volume, pretty decent and everything else. But these are not the numbers we're attracted to. What we are attracted to is things like token burns in a bear market. So 26.1 million of SUI of deep burn from trading fees, which is quite key. Now, this is not, of course, the only protocol that you need to look at. There's others as well. Cetus has been performing really, really well in the bear market, considering that it is down massively. But because everyone who uses SUI is likely to use Cetus at some point, and we know what problems they've had in the during the hack. But I am interested in the ecosystem. Again, smaller market cap coins are evidently more risky, but I do believe they have the right infrastructure in terms of the ecosystem to develop and to grow from here. And it's called the Mysticeti V2 consensus upgrade, which was back in 2015, was a big kind of moment for SUI. And of course, that increased the finality to 290 milliseconds, which is pretty fast. What else have they done? They've shipped a new GraphQL based RPC API, replacing the old JSON 1. Technical, you don't need to worry about that. The API runs a predictable quarterly release schedule. And these kind of, this is a infrastructure move. Then there's Walrus, SUI's decentralized storage solution. And that's what I was talking about in terms of being at the center of their tech stack. The data layer is something that they're going to market quite heavily. Okay. What else is there for SUI? In March 2026, they've launched their native stablecoin, which is called USDsui. And of course, it bridged through, I do believe it has regulatory compliance for the US markets. It generates yields, and it doesn't go to VCs or foundations. So it gets recycled back into SUI ecosystem through the SUI coin and buybacks and things like that, which is pretty interesting. And this creates what they call the flywheel. So there is something called the SUI, which generates yields, and that yield buys SUI in the open market. And the buybacks create a structural buying pressure in, of course, a better market condition. So the pressure benefits every holder of this network in a market that's moving. So back in January, for example, SUI processed over 111 billion stablecoin transfer, and that is definitely worth watching because we have seen stable market on SUI collapse quite literally, us with the market as well. So they are going to roll out what's called a native private transaction using a zero knowledge proof. And this is going to be critically important in terms of adoption. And one of the founders was talking about this very clearly. And again, sender and recipients will see transaction details. And crucially, it's going to be fully compliant with regulation frameworks. And of course, this is going to be automatically without the users needing to configure anything. Now, if you think about that, that makes SUI a privacy efficient layer 1 blockchain. So SUI's problem, of course, no major layer 1 is doing all of this, in my opinion. And this is a genuine competition for, for the big layer 1 blockchains, in my opinion. Okay. Now, the supply, aggressive, of course, you saw what was going on initially, but we do have inflation with SUI. But if you're kind of like, let's say you're a Solana whale, or you want to get to the status of being a whale with a layer 1, and you've accumulated over the last couple of years, and of course you're not selling, you're not looking to, you're taking advantage of the geopolitical macro risk out there, I don't think this is a major problem. I think at some point SUI should stabilize in the coming few years, and with a big bull market, it should be able to get to at least double what it was, or at least get to $10 for the next run. Now, from where we are, the returns are quite attractive, but I'm taking a long-term stand in terms of all of the things they are doing, and not to rush into conclusions in terms of the prices right now. It is a bear market, so you don't expect any ridiculous uptrends to start immediately, but what you are seeing is developer activities very stable. I think it's had a 219% growth year on year. Active developers, currently they have 1,300 monthly active developers. And of course, the only concern for me is if the bear market continues and people, of course, will be eventually panicking. But I'm looking at the complete levels of price accumulation that I gave you earlier at the start of the video. So that's going to be quite key. Now, in terms of the protocols, we had, of course, Deepbook and Walrus as their main two. These are the two that, in my opinion, are quite central to everything that they do. But without those two, there are also other critical infrastructure plays. In addition to that, there are meme coins. You know, there's Suilend, there's Bluefin, there's Cetus protocol. You know, there's many, you know, there's SuiPlay. There's so much going on. There's Walrus. There's a lot of things happening for Sui in the long term. The major risk, let's be honest about them. Number one, network in terms of the network outages. It suffered a second major network outage back in January. Of course, you saw what that was. Token unlock pressure. There's going to be a massive 42.9 million Sui tokens that are coming to be unlocked in April alone. That's going to be what sends us into the lower prices. Of course, number three, bear market macro risk. That is always going to be key. When Bitcoin's under pressure, the risk sentiment is generally beyond what we've seen recently. And right now we are looking at 2022. And, you know, we're looking at the war, the gas prices. We're looking at Fed potential rate hikes. So there's a lot of risk out there. But I'm not telling you to buy this today. What I'm telling you is if you are looking for a good technology in the long term, I think it's very, very important to consider where the next layer one is going to be in terms of on-chain volume for L1s. Solana, Ethereum, BNB, Hype, AVAX, NEAR, Sui, Tron, Monad, of course, base layer 2 network. So that's a very comprehensive, well-balanced risk versus reward for Sui blockchain. I hope you liked the video. I hope you like my analysis. Of course, it's a long format video, but smash a like, share the content. And of course, if that price pressure continues with this 42.9 million Sui unlock, then April could be a good time to basically study and see what's going on. All right. Take care, guys. Stay safe and God bless you all. I'll see you on the next one.